All right, here we go. Traders, we're off. Today is March 18th, 2013. It's Monday, but this video is for trading tomorrow, tonight through tomorrow, Tuesday, March 19th. That's what we're looking at. Let's see what we should do. Traders, a couple of moments ago, we just had a pullback down to about 1543.5. I think that's probably the low that we're going to see at any point for the rest of this day. But let's move forward. Futures trading can be extremely risky and cause substantial financial loss. We all know that. You should never trade without stops. And if you do not know the risks behind this game, it is certainly not suitable for you. But let me just say that welcome to 995. This is video 995. In this video, we are going to together find out if we should be bullish or bearish the S&P. Let me start with saying this. I am not calling top. I am not calling pullback. I am not calling anything at all except for I think we need to buy the dips. And let's look at why. Here we are looking at the June E-mini S&P daily bar chart. June E-mini S&P daily bar chart. If you recall, traders, this thing was a wonderful F flag that we were flying in, right? So here we are flying in our F flag. The market drops out of that F flag and comes right back into it. You can draw it many different ways, but we are now basically back into the F flag. It had a quick spurt down, right back up. Cyprus news took us down here. Ridiculous nonsense, if you ask me. What does it matter if they're going to charge the people who bank at Cyprus 10% of their money? Hogwash. We are in a very strong bull market. We have done bull flag after bull flag, or I should call them F flag after F flag, and it has worked all the way through this bull market. Every now and then we get this little teeny pullback like you're seeing here. Every now and then you get that little teeny pullback, and it leads right into another F flag. So again, we're doing the same thing here, traders. This is the E-mini S&P. Looking at slightly longer term view right now. Here's the E-mini S&P, another F flag. What does it do? It has this little pullback. After the pullback, it goes right back into another F flag, being this one. Here's the flagpole. Here's the flag. Goes into another one, has a brief pullback, right back into an F flag. This may be the only bit of a pullback you're going to get, because to be honest, traders, these markets technically are not ready to come off yet. So the little Cyprus opening lower this morning was a buy opportunity, and buy the dip seems to be the mode we will stay in. Albeit when it got lower today, we all had to think about maybe the downside's coming. But thank goodness towards the close, it rescues itself and makes it all the way back up here. That is your daily E-mini S&P. Let's look at a weekly. Traders, when we look at this weekly bar, there is nothing wrong with this market. That pullback was healthy. It didn't even tap the secondary parallel channel. It's actually a third parallel channel, because you got your primary, you got your secondary, and now we've got a third wave of parallel channel. This is on a weekly bar. Traders, this market looks fantastic. This is a booming bull market. It had this pullback right here. It almost got to the perfect buy level and took right back off again. This would be considered a swing bar back in the days where swing days used to work, right? You got a swing bar, you're inside this channel, holding really well. You've maintained inside this channel, and the whole time we've been in this channel, the weekly would convince any analyst that you got to be looking for the upside. But let's continue. Look at the NASDAQ. You had a major flag. We were inside of it for quite some time. Has a pullback. Nothing doing. Sorry, Cyprus. We don't care. We're the bullish S&P market. This is NASDAQ, of course, but it's all grouped together. Boom, right back up, right back into your bull flag. And I contend that this right here will not even exist by tomorrow. It will not even matter that this happened. It will have been a brief shakeout, and higher we should go. But let's continue to look further. Here's your NASDAQ weekly bar. Traders, could it get any prettier than this? These black channels are just there to show you how well this market has stayed within almost all of its channels, up and down, all the way through this big move. So each one of these is a really nice channel that could have been traded for quite some time until it broke out. This is a weekly. Here we are now in a wonderful channel. And traders, this looks like it's going to go straight up. This channel, in case you cannot see it, like all the rest on the board is black, but we'll make this yellow so that you can see it. Very nice channel. What could possibly be wrong with that? It's also inside of this blue channel. While it's inside of this channel, and the whole thing has stayed inside of its major parallel channel. You gotta love what you're seeing here as well. So far, so good, expecting all the way up here at some point in your weekly NASDAQ. Traders, look at this insanely beautiful trade. This is your dollar index. It had, count them, 1, 2 days down in a bull market, and what did it do? It just exploded right after that. And it got down to this parallel channel. What's really interesting about this channel is if you look at it, it really wasn't a parallel channel. It was a support line. And when you go like this over this support line and drop this one here, you realize you are in a parallel channel. But what I found interesting was that it held the support. It held that support line really, really well. Now this support line starts down here and just goes to here. The rest of it extends out, and months later, we crash into it just like we're supposed to. That is fantastic technical analysis. Dollars 2 days down, now right back in the buy mode, and probably will help the S&P continue to move higher. There are your dollars. Let's move forward. The Dow Jones Transportation Average Daily Bar Chart. Look at the series of F flags, little bull flags, which you would put right here. Here's a little bull flag inside of your F flags, but F flag into F flag into F flag into F flag, and that is all we're in right now. And your transportation average looks fantastic on the daily. Let's look at the weekly. Traders, look at the Dow Jones Transportation Average weekly bar. Look at these black parallel channels and how well this market has maintained staying inside of these channels all the way around. Look at this channel. Look at this channel. Look at this channel. It has been a perfect ride. It's in a very nice channel now. The weekly looks fantastic, and I'll tell you this much about the transportation average. The pipelines in the United States are jammed. They are full. They cannot hold any more crude oil that we're producing. We are producing more crude oil now, and will continue to produce more than ever seen in history coming out of the United States. We need to somehow move the crude. The pipelines are full. What do you think they're using now to move the crude oil? They're using the train system. They're using transportation in every way they can. They are taking the transportation to the hilt. And it's all about oil, and look at the transportation average respond. This I have been touting for weeks and weeks on end, that is what is happening now. And when you look at this chart, it is exactly what's going on. So longer term picture, not about tomorrow, Tuesday. But when you think about what's going on overall, transportation average has to shine for quite some time unless magically we stop producing oil, and I don't think that's going to happen. So there is your transportation average daily and weekly, and then there is something else to look at. Traders, look at the soybeans. We have been chasing this trade day after day. Today we didn't get it, but we certainly tried. We have been telling you about the bear flags. We have been telling you that we broke support. We have broken major support. Now we're heading down to the bottom of this channel. I think that is exactly where this market wants to go. Look, it started out with the head and shoulders, had a massive crack, ran up, started this parallel channel, is now coming down to the bottom of it after breaking a bear flag and breaking major support. If you look at the weekly, you will be equally convinced. Traders, the soybeans weekly bar chart, look at the size of this bear flag. My goodness, we have a long way to go on the downside. Not only is it a bear flag, but look at how it sits itself. You want to see something pretty? It sits itself right inside the right shoulder of a weekly massive head and shoulders in the soybean market. That is massive. It is a bear flag in the right shoulder. It's exactly what it is supposed to be. And we are going down in soybeans. Keep this in mind. Remember that we've looked at the emini S&P. Let's go back to that for a moment. Okay, traders, remember the emini S&P chart, and I want you to look at something. You see this day right here? Well, this day is a lot bigger than usual, and it started off, had a tremendous drop, and went all the way back just about to its highs. So what kind of a day is that? I contend that that is a bullish day. Here, boom, crashes all the way down, rallies back up. I think here, opens up, crashes all the way down, rallies all the way back up. The next day, you get a higher day. I think that that is basically what happens when you get one of these types of bars that goes all the way back towards its highs. Generally, it means it was a quick washout of stops and right back into the saddle we go. Traders, thank you so much for coming to today's class. I hope these classes help to keep you in tune with the markets going forward. And I hope this helps give you a picture of how to trade Tuesday, March 19th, 2013. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.